Okay, hello guys. Quick video today. So I just want to show how I will execute each time my trade. So I'm going to go with a bullish example and then a bearish example and define each step that I take to validate my A plus setup or invalidated. So right here, as you can see, we're at 1025 and 1035. So my first step is to mark these two vertical lines at the 1025 close and the 1035 open. So once that happens, let me just write it down. Bullish plus. Okay, so we're going to need, first of all, mark 25 and assess bias in here, which is a long because the candle is red. So in this case, it's a long. Second, we're looking to see 35 if we have the EMA agreement. So right here, we're above 21 and 200, and we're rejecting the crossover of the 200 and the rejection of the 21. So 5 M5 EMAs are good, and we're rejecting off of the 200 EMA at the same time of the 21 EMA at the 5-minute. Also crossing over the 21 EMA on the 1-minute and finding support right here from 25 to 35. So one is confluent. That's good. Next, we'll look and see if we're going from a major POI, so from a high liquidity to low resistance liquidity. So our high resistance liquidity is right here, this fair value gap. Okay, so this fair value gap right here is the POI. We have a great POI, which is, I think it's pretty much in equilibrium. Let me see real quick. Yeah, it's in equilibrium. Draw the gun box. As you can see right here, it's in 50%. So this is good. The POI is good. And so the last step is to wait for 35 open on the one with a bearish if that we want to in the with displacement. So let me just so this is our fourth step on the checklist, and it allows us to only take A plus trades. If we don't have this step right here, we usually don't take the trade. Last step is my risk parameters. So 1.5 SL, 1.5 tick SL, and TP with 3 contracts. So either plus minus 450 plus or minus 4, is it 450? 150 times 3, it's $450. So this right here is our bullish checklist, and as we can see here, the only problem we have is that we're not inside our trading hours, but we have the first checklist, the first check mark is good, second one is good, third one is good, and fourth one, as you can see right here, at the 35 open, we made this fair value gap right here. We don't take this one right here. This one right here is bad because it's before the 35. It's before 35. So we don't look into taking this one. We're going to wait for 35, then wait for a fair value gap opposite to our bias to be invalidated, and then we enter at the top of that fair value gap with a stop order with a 1.5 take stop loss and take profit. So this trade right here would have been an A plus trade. So we've defined a bullish A plus. Let's now go with a bearish A plus. So bearish, bullish, it's just the exact opposite. So first step, we're looking for a 25 that prints green. So right here, at 8.25 we have this green candle, and at 35 we have this candle right here. We're below the 200 EMA and above the 21 EMA on the 5-minute. So we don't have the best agreements on the 5-minute, but the idea is if we have a good setup of EMAs on the 1-minute, we can expect the 1-minute to support, to give resistance to the momentum to break over this 21 EMA on the 5-minute. So this was the idea. The idea was to use the EMAs on the 1-minute to break the 21 EMA on the 5-minute. So EMAs are good and M1 is confluent. Do we have a POI on the 5 minute? Yeah, we do have this fair value gap right here that was filled but not perfectly. So we might react off of it. And this is exactly what's going on right now. Also, so we have our 3 first steps at the 35th minute right here. Let's see what we have. So we wait for the 35th minute to print a bullish candle, which is bullish fair value gap, sorry, which is this one right here. And we look to inverse it with a 1.5 pip stop loss and 1.5 pip take profit. So this is our bearish A plus trade. This is right, this one right here.